establishing themselves as a good hub spot along with the MENA region also. But yeah, token 2049 has taken itself to a whole lot different level, wherein people from all across the globe, some of the top crypto companies, we have the best people presenting over there, and they are coming there to meet with new people, new technologies, and trying to understand the innovation that is being going on and how they can contribute and work together and scale themselves.
Definitely. Yeah. I mean, it's like a market downturn, especially like a token Web3 crypto. But all the feedback I receive is that this cycle is much better than the last one. Like people are pretty optimistic.
Right.
Yeah, last one like was a disaster, but this one, at least fundamental wise, it's good. Yeah, I think
Right.
it's good for the
Absolutely.
ecosystem. Yeah, just let me know if my internet is laggy. Yeah.
I think your screen is
Yeah.
currently frozen. Your screen is currently frozen, but I'm able to hear you clearly.
Okay. All right. Let me change the network quick so that it's before the session. 1 second.
Sure. Now it's good.
Yeah.
But I think like there is a lag in the video. So
Yeah. I'm trying to turn off the VPN. Yeah. Um, okay, sorry, I'm back. Is it better now or no?
right. Yeah,
Awesome.
now it's perfectly fine.
Yeah.
Okay.
Okay, anyway, Japanese, thank you for having me. And really amazing to see all the founders here. Like can't wait to just interact with you. And then I'm gonna give you a quick introduction of our fund and then myself later on. But yeah, please let me know, whenever I can kick off, or I can, just wait for a couple minutes until like everybody's here. Yeah.
Sure. So I'm just going on with I'm just going to share the introduction, and then maybe I'll introduce yourself, and then we can begin with the presentation. Right?
Sounds good. Yeah, sure.
Perfect. Hello everyone. Hope you all are having a great day. Nice to meet you all again. We started our journey back on September 5th, and from there onwards, we have held sessions on the user journey and user behavior side, wherein we were trying to understand how should we build a product, how our product should be user centric, like having user at the nucleus of the product is a mandate that we should always look upon. Then we moved forward and we had a discussion on the go-to-market strategy. Right? We try to understand how are we going to take our product to the outer audience, and hence how can we get the initial audience on board, which is going to serve as the market or product validation, and hence we can then go on to build upon it. Yesterday and like the previous two sessions which we hosted were on the recruitment and team building and leadership side, wherein we were trying to understand how should we go on to hire new recruits, what are the characteristics which we should look upon, what essentially comprises of a good team, and how should we go on to build ourselves. Right now, all these three building blocks are have provided us with the foundation, and hence we are now ready to go on to start working on these ideations that we have done by now. Today, now, in order to idealize or manifest all these ideations into reality, we need the most valuable commodity in the world, which is money. We all understand that fundraising is one of the most essential components that an enterprise needs to figure out how they are going to scale their business. Today, I am honored to host Jong Brian Lee, principal at SOSV and Orbit Startups. SOSV is a global VC firm with over 1.5 billion in assets under management. Brian carries a wealth of experience of scaling startups from roots to skies. He has managed over 54 portfolios and have helped them raise over $120 million and more than 35 of these projects have went on for the follow-up rounds. Let's have Brian on the stage. Brian, over to you. Take the presentation forward from here.
Yeah, thank you so much. Thanks for your introduction. Can you see my screen?
Perfect. Fine.
Okay, awesome. Hello, I'm Brian. As Japanese mentioned, I've been working for SOSV for the past 5 years, and I do manage multiple portfolio companies across like AI, blockchain, and media. I did 31 new investment myself from like all these jurisdictions, including US, Germany, Spain, all these Southeast Asia countries, Hong Kong, all these islands, and including Dubai as well. And yeah, my portfolio companies raised total of 120 million plus, I guess more now, with a 35 plus follow-on rounds. And yeah, among my 54 portfolio companies, I have like something like 15 that is in blockchain or crypto, Web3. And under our software department, I'm the person in charge of sourcing, evaluating, and investing in blockchain and Web3 companies. On top of that, I do manage like different things, but I'm the lead person that is facilitating the co-investment process with Warner Music, who are really active in crypto as well, Web3. They've been betting big on metaverse, but now I guess market died out a little bit. But yeah, a lot of media, gaming related projects in the Web3 space. So amazing to have you all, and then look forward to giving you some insights about us and the market, and then some of the fundraising strategy. Before going into the some other like market trends and then fundraising, would like to give you this is one of the event that I did last year. I've been keep engaging in a lot of conferences, crypto conferences, events, and I look forward to meeting you in the coming days. Yeah, what about the okay. Yeah, it's fine. So SOSV is a USD venture capital fund. We are very global. We have a 1.5 billion asset under management. We have 1,200 portfolio companies, and we do 150 deals per year. And under our fund, we have a different like verticals. One is the internet that is done by Orbit Startups, life science and biotech by IndieBio, and hardware by Hex. And I'm under internet department. So we are across the world, everywhere in the key cities and regions, including Shanghai, Korea, Singapore, etc., and Delhi. So 2022 was a great year. We were ranked as the #3 most active VC globally, and we were active in multiple regions, including Pakistan, Singapore, US, and all these countries. In terms of the sector, we were very active and been doing well in consumer, healthcare, biotech. But blockchain, we did pretty well too, as one of the pretty active investor in the market. And I guess I'll skip this as this is not relevant, but just to give you a little background of the fund, our biotech department, they do like all these future food, AI diagnostics, therapeutics. hardware, we do robotics, consumer, medical devices, etc. And software side, we do AI, AdTech, e-com, blah, blah, blah. And also like a fintech that is, can be a DeFi, right? And blockchain, like protocols like API3 or Cartesi. So we were ranked as a 5% VC, as our net IRR was like more than 20-30% annual basis. And we have a 51 blockchain portfolio at the moment. Yeah, these are some of the projects that we invested, including BIMMAX. We started 2015, got lucky, so we are the only and the first and only outside shareholder, and we are still like very actively engaging with the company in terms of the user acquisition and also investment. And they have their own like venture capital like arm, so we are actively working with them on the co-investment deals. On top of that, we have a Cartesi layer 2 of Ethereum. I mean, dropped a lot, but still doing okay. Basically, they have this Ethereum virtual machine that everybody can code in, not only Solidity, but with all these other languages so that they can onboard more developer to the market. We have a StackSwap, which is a decentralized exchange on Stacks. API3 is Oracle. We have some NFT projects. We have Vega X, which is makes the products on top of the with the crypto. IPO is interest rate swap on Ethereum, doing okay, pretty good. Atato is a custody solution using the multi wallet computation. And yeah, you can look at our portfolio on website if you're interested. And then I would love to give you a little bit quick background of the current landscape, right? So some macro trend that I wanted to point it out that the it's not that great, yeah, because a lot of event happen, interest rate, etc. Startup market in general is having hard time. So if you look at this graph, so this is the percentage of growth of unicorn comparing 2021 and 22. It dropped 87%. And among that, 50% of the Series A and B deals are all like trying to hold the valuations, which is like a bridge round. So at the moment, the keyword in the startup is basically profitability and then survival. It used to be like you get the VC funding and then trying to grow like whatever you can, right? Just spend tons of a marketing fee, do expansion, multiple markets. But now people care more about the unit economics, cash flow, and profitability. And I believe that also matters to blockchain or crypto Web3 companies as well. Depends on what you do, but yeah, it's a very investors are very conservative these days, and they are trying to look at data, traction, numbers. So for the Web3 space, right? If you look at the left side, so Web3 startups, the total number of deals and funding been reducing over time for this past couple quarters. 2021 definitely amazing year, but you can see the funding rate been dropping a lot, including the number of deals, and then I think there are a couple of reasons, just macro wise, because I mean crypto prices like a Bitcoin, Ethereum, or all these altcoins tend to follow the tech stocks, right? If at least at this moment, if the interest rate is high, then likely the liquidity wise it's bad, and the money won't flow to this new technology like blockchain. And especially for like Web3 space or crypto space, all this FTX and FEB, all this event happened like recently that crushed the market a lot. However, venture funding volumes, I guess 2022, this is more like just AR or VR space. I put this graph because just want to give you a quick idea that some applications are slightly doing better than others. Yeah. And then AR, VR space, it's steady, it's slow. I mean, especially during metaverse, it got like much more funding, but yeah, I guess it's there. But next slide, I'm gonna show you something interesting that the among like a 2023 Q2 like a top projects in terms of the investment, gaming seems like doing extremely well. And I've been engaging with a lot of key like blockchain like investors these days, and it seems like everybody is betting really big on gaming side. As a DeFi, the usage went down, active users, because the price is low. It's just a market is very quiet. However, gaming side investor believes that there's still utility there, and then I mean, all the games back in the days like a play to earn. It's not like the best ones, right? But I guess the trend changed a little bit, that they want to invest more and then trying to make some games that can compete with the Web2 games. And yeah, money is flooding there at the moment, and we hope to see some like a progress in the coming quarters as they are like developing all these new games. Hopefully, new concept too, as a play to earn wasn't like really sustainable. Insurance been doing okay, pretty well, ranked number 2 Q2. Social network and funding, media, education, wallet, etc. I guess metaverse was or NFT was like a big thing, but it died out a little bit. So yeah, in terms of a sector, it's just a little bit a transition here in Q2, and just from the Morgan Stanley like a report that there might be some changes with the interest rate, hopefully early next year or mid of the next year, plus a Bitcoin harvesting soon in end of the year. So maybe DeFi might do well with the momentum coming in, with the liquidity coming in soon. Yeah. And some interesting trends. So NAS, Node as a service, seems like some popping a theme in the Web3 ecosystem, and some giants, internet giants are entering, including Huawei. They want to compete like AWS, right? I mean, there are some applications like that, but some corporates want to be more progressive, aggressive with their like Web3 agenda. And one thing I was hearing a lot last week in a Korean blockchain week, especially from like a Hashed, they were like looking into this AI plus blockchain category a lot. I mean, there are a lot of application under there, right? Everything it can be generative AI, or it can be something related to the tokenized bond, etc. But yeah, this is a big theme that is happening as a AI stock. Like after the ChatGPT, some mass adoption and awareness, like the valuation went up a lot, and people do see some feasibility with AI to the end consumer. So a lot of like a top tier VCs are very looking into this space carefully, combining the AI technology with the blockchain decentralization. Yeah. So now I'm gonna talk about a little bit on the preparation and strategy for raising funds. I guess most of you raise fund, right? And some of you might have experience, but I wanted to just start with the foundation, start with the basic, and then we can do some Q&A, and I'll take some question on your individual request. So the first thing that you should do before fundraising, though, is the data room preparation, because this is very important materials for investors to do due diligence. And here is some framework that usually how Web3 investors are doing the due diligence of the Web3 projects. I mean, market assessment definitely matters, right? Like a market projection, competitor assessment, and bunch of other parameter that affects the market. They will look into them. As a Web3 ecosystem is so big, they need to know what you're up to, which space you are at. And company assessment, basically product and your traction and community. I think this is the thing that matters the most. And your business model, revenue model, shareholder, who's on your cap table, who are your investors, and also your team. Technology-wise, they will review your tokenomics. They will do your tech DD, the codes. Depends on the investor, but some crypto savvy investor, they tend to have a tech due diligence process as well, and they will look into all the UI UX, get an account, and then they will go and test it out, see if there's any bug, any bad experience using the product. And business plan and valuation, they will look at all the projections, a financial model basically, that how much you can generate in terms of user, all the key metrics is in the end revenue. And regulatory and all this legal compliance stuff, they will look into it. So you should have a document with all these different information materials, chunk it to the folder. Some are like very basic, like for example, like legal documents. So it can be like company incorporation or your past like investment documents. Your legal structure, your subsidiary, etc., or even your token foundation, right? You should chunk it into one folder, organize it, and also pitch deck. It's very important. I mean, they will look at it initially when they get in touch with you, right? But usually in the pitch deck, or we call it investment deck, you should have a multiple version. One is more like a simple one that people can easily look into the company concept and the product, but you should hide a lot of sensitive information there. You never want to just give everything when before you validate the investor, right? So you should have 1, 2, or even 3 versions of an investment deck with a different content, company, some like fundamentals and appendix with further like information of the company. And you should put a folder about the product, probably UI UX, your architecture, how it works, and all these features, projections, or financials matters a lot these days. As a company, all the VCs care about the company cash flow and profitability, and that also includes Web3 companies. That even if you are planning to list the project, right? They really want to see how the tokenomic works, how the economic works, and how this revenue, in the end works. That as you will be revenue sharing with the protocol, right? Team matters. Just put all this document information about your previous backgrounds, what you did, projects. But I think the key is that to put your achievement rather than what you did, where you worked. Put like, for example, I worked in the some crypto VC and help like the VC fund, like actually like 150 million deal. Just put more numbers in there so that, people can see what you are capable of. Tokenomics, light paper, it's a very basic. And it's the most important thing. Even if you have a draft version, just put it there. But I do recommend you to get some advisor just before you send it to the investor. Try to take a quick look if the logic makes sense. I do read a lot of tokenomics, and then just some of them, you can tell that it's the logic doesn't make sense. It will leave a very bad impression. So tokenomics is not economic wise, it's not that crazy. So just map it up, get some feedback and make sure at least it works. And some others like competitive landscape or your marketing community, I think it's really good that you all put all these details in the this due diligence folder. If you don't have this and you are just making like a blocker, so making an investor tougher, right? That they will need to ask you, send email, can you send me this, can you send me that, It's just we're exhaust the investor, and investor never waits, because every investor's looking into multiple deals. It's not only your deals, right? So you want to make sure you are ready and you are fast, and whenever there's a chance, you want to be the first one. And yeah, just make sure follow up fast, and then have a material first that is ready, so that when they have felt that this project is something interesting, then you have something that basically send it over, then investor can do the full DD, right? And regarding the fundraising process, yeah, I guess the most difficult part is how you source the investors, right? I mean, there are a lot of investors, and there are multiple channels. I listed four. That is the four most common ones. Like, for example, like you usually get referrals, from your partners, or even like your friends. And this is the most reliable one from the VC perspective, that it's already been filtered out from their close friends or like their partners, that it's something reliable. And yeah, if you so all this networking effort is trying to build this referral process, right? So that some of your partners can send your deal over, and this is the most reliable way. So try to make these channels as much as you can, referral channels. They are a lot in the market. And conferences, yeah, one happening in Token 2049, even though there are a lot of parties, but yeah, it's a very good way to meet all these industry players and VCs. And VCs, yeah, they have a multiple channel, but conference, meeting face to face and hearing about the business, I think it's something that, it's much better than the cold reach out, that, it just feels different, right? That, this person is real. You spend some time together, probably you grab the beer, talked about, even personal life. That kind of makes the difference, that the investor might feel a little bit more responsible, to, look at the pitch deck. Organic is very, very important for startups. Yeah, you should always build up all these channels so that investor, you get the investors, right? But organic ones, it's something that is very valuable. That even without all these efforts, that going to conference or trying to beg somebody to help you make connection or do all these cold reach out, if you have a good social, some press release is actually very good, especially on some tech press. People were sometimes going to the the news, checking out, and saw your company. They will do some research, and they might reach out to you on LinkedIn. But I do recommend you set up all these marketing assets, like your social media, Discords, LinkedIn, Twitter, everything. Just make sure you have a presence everywhere. And one thing I thought can be really valuable is a Medium article it can be about the market or something that related to your a sector, right? But writing some article, I think it gives a very good a reputation for the projects. And then, when they like one article, they were looking to others, and some might, describe your project, right? It's a very good way to give, good impression. And then it's a very good organic channel for you. And yeah, I look at, the Medium articles a lot about different protocol channels, new things. And then I do reach out to a couple founders after, looking into the some of the very nice, ideas. So yeah, either way, right? When you get in touch with the investor, the most important thing is try to get a contact. Maybe they've been connected with you with email, etc. But try to just get connect with Telegram or WhatsApp. Something that is more convenient to follow up, or nicely ping them, right? And especially when you met somebody during the conference or event, get the Telegram, try to take a selfie. I think this is very important. As a crypto, like a conference, there are so many events and so many drinking, right? And meeting so many people. I mean, like, for example, for me, like Korean blockchain week last week, one event I can meet like 50 people, talk to 50 people. And it's really hard to recognize, which one is, you, right? So try to take a selfie. And then this is the key. So make sure you put some blurb and send it over with all this company information, like a website or pitch deck, and one liner of what you do, your traction, and then also your backers, etc. So that people can quickly, without clicking the pitch deck and going through the deck one by one, as that creates another bottleneck. Yeah, you should have some blurb that can quickly remind the person that what you do and how amazing you are. And then they will probably click to your all this pitch deck and other materials, and then get back to you. The thing is, just remember that investor meet tons of people and tons of like the startups or projects. It's really important to give an impact and remind them and make sure they memorize you. And then give them some key information so that they can take a look. So this is, it's like funnel, right? First engagement, and then secondly, you should give them some quick info that you can schedule the meeting. Okay, so this is the way that if they don't know you, they usually won't like accept any like meetings, right? They will just like ignore you or like so yeah, please just send over some information. It's really crucial. Then please ask for the meeting. Don't delay it. If you met somebody in the conference, right, ask for the calendar and fix the date. There is investor have a limited time. They have their own company portfolio management. They do attend different meetings. Yeah, they have a limited time to do sourcing calls, and you should be the one that at least fix that, because that time slot never lasts. Yeah. So this is very the key. Just have a chat, and then I would love to, do a call with you. Can I have your calendar? I mean, you can send it over yours, but usually if you send your calendar, likely they won't book it. So try to get theirs, and then you book it, the coming week, and have a chat. That's how the investor lead generation works. Be proactive, and yeah, I mean, and after all this process, then hopefully you get the first meeting, right? So first meeting usually will be more like a introduction. So usually like 30 minutes quick call, 10 minutes about the company presentation, right? You're talking about your business, and pitch deck. I'm pretty sure TDeFi will give you like a very good like a format template about how to build the pitch deck. But yeah, try to make sure you make it easy, clear, and then give them the quick idea of what your product is, and then how impactful you are, and what's your traction if you do. Yeah. Just remind them like with some like a key data. It's the key, and then yeah, you will do a lot of engagement. He will ask you questions, and that's pretty much the first call. Try to leave an impression. Yeah, it can be something that is a future potential, or it can be something that you already have achieved, or something that you did it in the past. But leaving some impression and then let the investor feel that you have a potential really matters. Because if you don't have anything that's surprising, or feel like your company has an unfair advantage, then it's likely you won't enter the next phase, which is the second meeting. So luckily, if you enter the second meeting, that means investor is very interested, and then they did more like research after the first call. And then they will come up with more, can be specific or technical questions. So second meetings, usually it will be driven by like a very key questions from the investor side. On top, you will be joined by other colleagues. It can be from the general partner. So if you are talking to some associate, they will bring the partner or GP on the call, or yeah. So that's a very good sign that, means that the initial contact approved the deal and trying to make sure other colleagues join the call and, listen together. Because usually VC investment committee, right? It's not decided by single partner. It need to be done by in a group effort, right? So it's a good sign that your point of contact brought somebody else, but they will ask you very like specific questions. I think you should get prepared. So another tip I usually give it to my startup is that try to have your co-founder or your colleague to join the call, and you as a CEO, you should present, but the other colleague should take all the notes of the question asked by the VC. That's a super valuable assets. As all these investor, mostly they ask the similar questions, and you want to blend that answers to the pitch deck or appendix so that you remove the doubts, right? You don't want to just let them have so many questions and they ended up like they got lazy or busy. Then they likely just drop the deal, right? Instead of looking into more on the details. Make it easy for investor is the key. And after the second meeting, after they approve all these initial companies ideas, and if they after they loved it, then they will enter the due diligence process. As I mentioned, you should have a material package, DD package ready, and they were looking to all these details of a company, corporation, company structure, cap table, shareholders, and then all the subsidiary, IP, company, product, all the features. And even they will ask you to get access to the analytics or even the code, some backend code. And they were looking to your community, how you are doing the marketing efforts, Discord, etc. Tokenomics for sure. They might do more calls regarding that tokenomics. We'll ask you a bunch of questions like why is like that and this, and what if this happens, all the risk they will list for you, and you should have some answers for that, and that's valuable too, right, for your company building. So hopefully after the due diligence process, then they will start to give you an offer. And it can be a pretty tricky negotiation, as if you are raising first time, you never know what's your valuation, right? How you should negotiate that. You don't even know what's the fair price. So that's something will be very confusing for you. There are multiple ways you can check out. Firstly, you can find the comparables on the market, like some similar product, similar space, how much they raise at what type of stage. For example, MVP, or like a beta, or like launched but within 1 year, or like you can reference all this record. But the other way is these days though, crypto investors tend to use the projection a lot and do some cash flow analysis to derive the valuation, even though that doesn't apply to all the Web3 projects. But some of the DeFi projects, I think it's a way that they can somehow estimate the valuation with the traditional method. So what I can tell you is that these days, valuation dropped a lot in the Web3. Used to be, first, even like the first or second round, like the private rounds, was like more than 15 million, 20 million fully diluted valuation, and before the listing, there were, and most of them were like 100 million, 80 million, or some are more than 100 millions. But now, what I witness is that I see more like under 10 million fully diluted valuation deals, And that's the sweet spot for a lot of VCs these days, like IVC or like Spartan, Animoca, etc. Yeah, but try to find the comparable. That's why you should meet like more investors and then try to find what's the suitable valuation. It's more like a demand and supply, right? It's price. You want to make it higher, but from the investor point of view, they want to get it cheap and have a more ROI. So you need to find this middle ground that suits both of you. But like every product, every project, every sector, DeFi, gaming, everything varies, right? So you should talk to more people. Also find online, there are a lot of information there, like Crunchbase, etc., that you can find some variables, comparables to fix your valuation. Yeah, and hopefully, yeah. I mean, after you closing them, you should look for the next one. Depends on what the instrument you raise, but it's a continuous process, right? You never stop fundraising. You want to make sure you have a runway. Yeah, as a CEO, that's a duty, right? Fundraising is a big part. But hopefully, by all this iteration, you will get the insights from the that can be from the product side, or it can be from the valuation, or from the all these aspects. But it's great that people with expertise are looking into your deals and pointing out all these questions and doubts. That's it's a very good for you, and it's a way for you to optimize yourself so that you can get the better investor, better terms. Yeah. And next one is about the urgency. So yeah, I've helped the company close so many deals, right? And one thing I realized is the urgency really matters. So basically, like you cannot just be optimistic and then just wait. You should put urgency. And one way to put urgency, it can be just keep following up, sending news updates. Updates is the key. Try to make sure you send prospects updates regularly, even though they reject your deal. Be nice, and then try to send monthly updates about your progress. They might come back. It can be like a stage misfit or sector misfit, but who knows, right? They might change their DCs, or that the person might move to other fund. So make sure you accumulate the number of all these prospect VCs. That's super valuable, and you will increase your fundraising successful rate dramatically. Trust me. Yeah. Secondly is put competition. So when you design your round, you can put like a seed 1 or seed 2, something like first round 1 and first round 2, like seed 1, seed 2, something like that. And you put the due date, deadline. Okay, you must put the due date, and then you give a little bit like sweets, like you give a 10% discount, etc. So make sure you push them so that you let them make the decision faster, or this deal will be gone. If you don't put the urgency, people might just wait, right? If you are so committed, it's like a dating, right? You cannot be just like sitting there and wait for the answers. You should just go for it. Or you need to show the investor that I have another investor, is like giving me flowers. You should make the decision fast. Make put the competition, right? That's why you're talking to more people. You get more commitment. Your deal will get harder. That's also how you make your valuation or price higher. Yeah. You make the demand higher, yeah. Just put it in the competition. So just meet as much as you can. When one committed, you can use that as a weapon, momentum, to push others. It's like a domino effect. Yeah. Use that mind trick really well. Will help you, close the funding soon with a better price. So urgency always matters. Try to follow up. Try to send updates. Try to accumulate the investors, and whenever you are closing the round, try to put the urgency so that everybody committed investor wire as soon as possible, sign and wire as soon as possible. Because if not, I saw sometimes that the round just completely collapsed because lead investor dropped, or 20% of investors suddenly want to just reject the deals. Then it will affect the other co-investors. That's why you should, when you have a round ready with all the committed investor, you should just close them as fast as possible, or find alternative and fill that in immediately. Yeah, just I saw so many companies die because of they were so optimistic, thought they were close 100%, ended up the round didn't happen and they bankrupt. And I hope that that's a good lesson. Yeah. Next thing, I want to quickly talk about the funding structures. So yeah, it's always been the question for VCs: should they invest safe, SAFT, or safe plus SAFT, or all these different methods. It used to be popular to just do SAFT, especially crypto investor. They didn't even care about the equity, and plus because they don't want to trigger any like a tax exposure, right? So they tend to just sign SAFT and get tokens. But these days, though, like the trend changed a lot, because some companies, some VCs realize that without equity, you are basically having less exposure with the actual entity compliance and all this, because it was like how like some Web3 companies structure their businesses, that they do set up token foundation, right, and issue tokens from there. But you must have a physical entity to hire people, HR, office, but moreover patents and all these assets are under this entity, and the investor might ended up lose this access to this physical the things. It can be code, or it can be talent, or it can be IP pattern, or even contents, right? That must be held under the physical entity. So these days, crypto VCs, they tend to look for both safe plus SAFT. So that's a very common these days. And then here's the question: then how you should derive the proper proportion. I would say the most common way is that they were signed safe. For example, like a 200K check, with the safe, they will have a valuation cap and discounts. And for the SAFT, they were with the same 200K, and then they will put the price per token over there, the token valuation. So basically, investors are double dipping the equity and SAFT, and that seems like the kind of the common way these days. But for example, though, like for example, our portfolio company BitMEX, they never did the ICO, IDO. They never listed their token, but they are still very profitable, business with more than billion, valuation, right? And investors are still happy as they choose that track, which is equity track. Cash flow, dividend, everything is there. On the other hand, if some projects, they likely will do a token launch, and everything will be done on blockchain with tokens. So all the values might held through the tokens, right? Then we in that case, likely the all these company assets and value will be held under the ecosystem, the blockchain tokens. So yeah, investors tend to want to get exposure from that side. And when that happens, usually the physical entity will likely be the operating entity for just contracts and hire. But yeah, I mean, investor these days, they care both. So it's okay for the investor just want to do SAFT, just offer them SAFT. But when they want to do both, yeah, you should accommodate them with a proper standard. Yeah. Safe plus SAFT is the easiest, but are trying to in the both end. You might negotiate slightly with the investor that, if you want to double dip, I might give you a little bit less, but, just see, if you can, get better deal. But usually it doesn't matter though. Usually it's either equity exit or like a token exit. It can't be done both in the end. So yeah, that was about some funding structure. It transitioned a lot for the past like 5-7 years. But I guess yeah. You should have all these formats ready though before you're talking to them. One tip is that never try to send them your document rather than let them send theirs, as they might have some exclusive or like some risky clause in there that might be in the long term bad for you for the company operation. Especially from the equity, like a safe agreement, they might come up with some clauses that is added to the template that can be potentially like very painful for the company. So yeah, safe, you can download it online, and the same for the SEFT. Just make sure it comply with your company entity, and you can talk to your legal advisor. Make sure you have a set of document before you raise. And then also your token raising plan with all these price pressure and then equity valuation, etc. Just plan it ahead. Yeah, that would be super helpful for your raising. Yeah, because if you don't have that, investor might just come up with a price. Then you are in the bad negotiation end. Just it's good that you propose first, and then you find the sweet spot. Okay, so I guess that was like a very quick introduction. I mean, I can go really deep in terms of like a legal or like a specific fundraising, like techniques, etc. But I guess today was a first session. I wanted to give you some general like a process, of a fundraising and what's popular these days, and then also the market landscape. So look forward to connecting with you after the session. And then, yeah, if you have any specific questions, yeah, please let me know. Hopefully I can be helpful. Yeah, thank you so much.
Sure. Thanks, Brian. Thanks for sharing the industry secrets that just remain with a broader, with a very much limited audience. Your points that you clearly mentioned around like share the project by themselves, share their documents with the investor, loudly speaks of the ethics culture that you follow at SOSV, and thereby we are able to say that you are there in the top three VC firms, which as per the data that you shared by PitchBook, your keen admiration to help the projects in helping them understand the nitty-gritties of how this fundraising industry works. It may seem like for the outer audience, it may seem like I got a lucky charm and I was able to raise one. But if we go down and try to understand it from a deeper level, it's a process that we need to do. We need to do the cold reach out. We need to go on for the conferences. We need to connect with them. We need to regularly follow up. We need to share them the updates, and we just need to establish the warm connect and try to engage with them, let them know what we are trying to do and how can they come on board as an investor with us and help us strategically, not just money wise, right? So yeah, cool. It was really I was really enthralled with the information that you shared, and I do have my notes ready. I am sure the rest of our audience would also have taken the notes for themselves. There are a bunch of participants which would like to have a discussion with you, and they do want you to clarify their doubts. So if you may allow, I can just help go on to call them onto the stage, and they can share their doubts with you.
Awesome. All right. So, any questions? I see some hands. So first,
Yes,
Alexander, John Boyd, who wanna go first?
Alex,
Thank you very much for the presentation. It was really valuable advice as I am an investor personally, and I fully agree with your recommendations. And here I represent one of the best startups from my investment portfolio. It's a Bengo Impact Turn. But I have a question about your investment strategy during this crypto winter, because as you said, the investment amount dropped a lot during this time, but it's very well known that it's a good time to invest.
For sure.
When there is blood in the market, it's a great time to invest. So what is the situation with your funds? Do you increase a number of deals during this time or not?
Yeah, I guess during the when COVID was like just happened, everybody were very conservative, skeptical. We were the ones that invested heavily. We doubled down during that during the time and got pretty nice deals. And same for this time, this cycle downturn. We've been very active with the investment and also in the Web3 space. So recent deals that we did was some RWA project in India and Latin America, and we did one in Nigeria on and off ramp solution. The other one was it's a crypto education platform working with a BitMEX, Spartan Group, and more. What else? I think we did one or two more. Yeah, we've been really active, and we are. Appreciate the valuation these days is somewhat sane compared to like a year or 2 years ago was something that I thought was not right, and but you are very right that it's a very good time to invest in, especially in group projects, and as the money is tight, a lot of companies are dropping valuation and and raising funds. And it's a good time to source good companies, with a fair valuation. And we are active, super active.
Thanks. Thank you very much.
Mm-hmm.
John, please come along.
Jong, thanks very much for your time. And always nice to hear insights from the VC, because with every VC we've spoken to, they just sit and really listen more and ask the questions, right? And try and suck out everything they can to get an advantage from you.
Exactly.
So it's quite refreshing to hear it from you, right? Telling us, getting in your mind. But quick one, firstly, I've got two questions, if you don't mind. Why can't you exit both from SAFE and SAFT? Is that because of how you structure it yourself as the founder, right? You give them both options, right? A double dip, but if they want to exit from one, is there a clause you put in there that they can't exit from the other at the same time?
Oh, okay. All right. So I think I got your question, and thanks for asking that. It's not from the legal clause, It's more like when you look at the crypto exit deals, we barely see some companies that exited with equity plus token. Because usually, what the company value, right? It doesn't go to this two side like equity, entity side and the token together. Usually, it goes to the one side.
Yeah.
That's why and you never know. Some company they wanted to operate with the equity, but one day they want to do ICO, right? And it happens, and vice versa. Even a token project, I do recommend you to also have a, equity raising with equity investors. Why? Because even if your token launch failed and your FDB dropped to like a zero, you still can somehow revive with your whatever you built, right? With the equity, generate cash, money, just from with the equity entity operation. That's still feasible. Yeah.
Okay. I think I get that. And you would you offer that combo to an investor, or are you saying kind of have two different investors, one that's looking for equity and one that's looking for tokens?
No. So These days, I do see more investor want like like an equity plus token, but some crypto investor though they might only want the token. I still see some crypto investor only do token theft because tax exposure, and they don't want to they don't want equity. But that's the thing. But that's some special case, right? But most of the big like a crypto VC institutional VCs though, I see the trend that they want both.
No, thanks. And maybe this will help some of the other guys in here as well, because I don't know how many people in this accelerator are earning revenue already. But that's obviously like the top 3 things to look for as an investor, right? Your team, your traction, your revenue. But if you are pre-revenue, which I'm sure a lot of startups in an accelerator program are, what is it? Do you have 1 or 2 top ways to actually form a fair valuation when you're raising? Like, is there a method, to use, or some factors to highlight? Maybe that's my question.
Yeah, sorry, I dropped for like 5 seconds, but I heard your question regarding the valuation, company valuation. Is that right?
If you are pre-revenue, is there one way you would find a fair valuation?
Yeah, there's a way. So you do make projection. So after you accumulate, if you're B2C, then after you accumulate this user with a certain transaction, then you will drive a certain, like cash flow with your either, token, ecosystem, or with your, equity, right? Sorry, the entity. Either way, you can calculate how much money is, driving there. And with that basis, you can calculate the valuation. Yeah. But so if it's a pre-revenue, yeah, it's not easy. So it's more like they will imagine the bright future, or also a conservative future, something like 2 to 3 years, and then with that basis, they will give this discount with that on that 30%, 40%, because you are investing earlier, right? Because you are like taking more risk. That's how they do. But easiest way is like compare with the what I do. Another way is just find some. For example, if it's like a gaming guild, then I go check out. Like for example, YGG. Their fully diluted valuation, their MAU, and their NFC transaction, or like daily usage, blah blah blah. All these metrics. I cross compare with my new startup. Even if you don't have a revenue, you might have some users or something, right? And then you cross compare, and then you can derive valuation with that value, and you give some discounts. That's how I do it with some projects. So one is from company, cash flow, or compare with a bigger project and compare the key metrics, and you give discount based on that. Yeah.
Thank you.
Yeah, no problem. Yeah, thanks for asking.
Yeah, Mohammed, please put forward your doubt.
So
great
Muhammad.
Yeah, here we go. Hey, great presentation. Thank you so much. I'm good. I'm good. I just have a question. In the like, there's a terminology called like zombies companies, right? The companies who burn too much money just for the sake of growth, etc. So like right now, borrowing money is expensive, is not cheap like before 2020 or 2021, right? So I just have a generic question, basically, in terms of do investors right now care about start making profit early in terms of how you build your strategy and how you design your business model? So I'm saying I'm asking about like your general feeling about the investment landscape. Do they care about making profit early, too early, or they care about like getting traction, more active users? After that you can make profits later. So what is the generic feeling for how the investors are looking at this, at this area?
I have to say, like, different projects. I mean, it's hard to say, like one single answer, right? It definitely varies, depends on the projects and what you do. But general feeling that I got is that, they want your healthy growth, organic growth. I mean, you can throw money and get users, but they also want to see how you are driving users with your organic, way, right? And also they care about the retention, and moreover, they really care about how you spend money, expenses. So they want to make your unit economic and P&L look, something like feasible. That is, not too crazy, sustainable, and wrong way is the key. Investor won't invest if this project is dying in 3 months, right? For example, you have a 100K in the bank and you're burning like 80K per month. You're dying in a month or two, then people won't fund your projects. And plus, if you can achieve profitability, for sure, it's a good thing, right? It means it's sustainable. It's a healthy. Because right now, survival is the key as your competitors are dying out. So even if you're not growing like a crazy, just by surviving in this market, it's already a win. It's a big win, right? Yeah. So cash flow, expenses control, organic users, and retention. I think those are the key metrics. Then your month on month, like like registrations or total users. Yeah.
Thank you.
Yeah.
I would like to have your thoughts on a point. Like, I have been on numerous calls for our incubated projects. Like, we get on a call, but all the times, like, all our projects could not fit into the investment mandate of the investors, right? So there are times when we are, getting on calls with them, but we do not hear back from them. What are their views or their thoughts for the project? What would be the best strategy for the project so that they can just get the feedback from the investor? If we are not getting some tangible value in terms of money, a feedback is always helpful for us to work on the product, work on a aspect which the investor is.
Yeah, of course. So yeah, that's a very good point. It's basically you need a strategy, and it's pretty much similar to how you onboard your client or users. It's like you have a funnel, right? And some investor, it's not a fit anyway. I mean, you just need, they won't get back to you. They won't invest in you. Yeah. But some investors, I think, you should do like a maintenance. First of all, you should make a good impression. You need to show potential and unfair advantages that, just put the idea in their mind that, it's something potential, but I'm not sure, phase. Then what you can do is you just gently ask them, if you can put them in your update email, and just unconsciously just remind them about your project, right, your progress. And likely they won't even read them, but at one point, if you keep sending, that's already building trust. And then they might click once and they feel like it's amazing. Then they will start clicking your previous updates. And then that's a very, good signal as you've been like trying to build up the trust for a long time, right? You have the track records, then they will start trusting you more. Sometimes you can't expect the immediate feedback, right? As they are also busy and, looking at so many deals, but try to retain them and try to build long-term relationship. I think it's, very important. And also quick follow-up. And I mentioned to you, right? Just make sure you use all this effort to let them remind you. That can be taking a selfie, put it in the Telegram when you meet them, send company, blurb. It's easy, but it's so useful for investors, right? It's a matter of, knowing your project or just skip it. On top, just gently send them updates, just be nice, retain them. If they don't feel like, reply you now. Yeah.
Thank you, Brian. It was really helpful. And we'll keep in mind and try to inculcate these habits into our ongoing procedures. Thank you, guys. Thank you for joining us today. Thank you, Brian, for sharing all these valuable insights. I hope we have learned a ton from you, and we'll be implementing all the all the learnings that you shared with us, and hopefully we'll be able to build upon all these things that we learned and go on and be able to raise funds for our project. Thank you for taking out the time and connecting with us today. Thank you. Bye-bye. Take care. Have a great day.
Look forward to seeing you in person, yeah? Cheers. Bye-bye.
Bye-bye.
Thank you.
Bye.
Thank
Have a
you.
good day.